Hey everyone, and welcome back. We're going to be taking a deep dive today into Century Plyboards India Limited second quarter results for fiscal year 2025. We've got their press release, hot off the presses. We've got their standalone financials, and we've got a really interesting investor presentation. And the big story here, they hit their highest ever quarterly revenue.
Yeah, it's really impressive. Not only did they do this on a standalone basis, just their core operations, but they also replicated this success on a consolidated level, so that includes all their subsidiaries as well. It paints a very positive picture for their growth trajectory.
So let's get right into the numbers. Standalone revenue from operations increased year over year by 10.6% to 1,063.2 crore. But on a consolidated basis, it was even more impressive. It jumped 18.7% to 1,183.6 crore.
These are really strong figures, especially when you consider the macroeconomic environment they're operating in. It really highlights how effectively Century Plyboards is capitalizing on market opportunities and solidifying its position as a leader in the industry.
Their EBITDA margin was 12.6% for Q2, which is down a little bit from 13.5% in Q1.
Yeah, I mean, profitability can fluctuate from quarter to quarter, right? What's important is the overall trend. And in this case, Century Plyboards is still maintaining a healthy profit margin, especially given the record-breaking revenue we just talked about.
Yeah, that's a good point. It's all about balancing that growth and profitability. And actually, their profit after tax increased from Q1 to Q2. 73.9 crore to 75.7 crore.
Exactly. So even though there might be variations in some metrics, their overall financial health appears quite robust. I think it would be interesting to look at the performance of their different segments, starting with plywood. This segment was definitely a star performer this quarter, reaching its highest ever revenue and achieving a remarkable 15% EBITDA margin.
Wow, 50%. That's really impressive. What do you think are some of the factors that contributed to this performance?
Well, it looks like a combination of factors, right? They have a smart product mix. They have robust sales volume growth. They're up 16.8% quarter over quarter and a staggering 21.1% year over year. And it looks like they've implemented some price adjustments to offset rising input costs. All this while strategically reducing their marketing spend really speaks to their operational efficiency.
Okay, let's move on to laminates. They saw pretty healthy sales volume growth, 8.1% quarter over quarter, but their EBITDA margin dipped from 12.3% in Q1 to 7% in Q2. What happened there?
Yeah, that's interesting. While the volume and revenue numbers are positive, that decrease in EBITDA margin suggests a strategic shift to me. Looking closely, Century Plyboards actually ramped up their marketing efforts for laminates in Q2. This could be a calculated move to capture a larger market share, perhaps by launching a new product line or targeting a new customer segment. It'll be interesting to see how this plays out in the coming quarters.
Okay, so playing the long game here. Investing now for potential future gains. Let's move on to MDF. Standalone revenue for MDF stayed relatively flat quarter over quarter, but on a consolidated basis, we saw a 28.1% jump quarter over quarter and a 36.5% increase year over year. So what explains this disparity?
Yeah, you've hit upon a key point. The standalone numbers show a dip in their EBITDA margin for MDF. It's gone down from 14% in Q1 to 12.2% in Q2. This suggests that they are facing external pressure, particularly from rising timber prices and a very competitive market, which might be making it difficult for them to raise prices. However, the consolidated results, which factor in the performance of their subsidiaries, reveal a much stronger growth trajectory, likely driven by strategic expansion into new markets and increased production capacity.
So they're leveraging those subsidiaries to navigate these challenges and tap into new growth avenues. Makes sense. How about particle board?
Particle board saw positive momentum, with revenue increasing 7.8% quarter over quarter, driven primarily by higher sales volume. However, similar to MDF, they're experiencing margin pressure due to the rising cost of timber. This appears to be a recurring theme across segments that rely heavily on timber as a raw material.
Yeah, those timber costs are definitely a pain point for them right now. Their financial statements also show the performance of their other segments, like the container freight station services. Looks like those are holding steady. But I keep seeing this buyer's credit in their reports. Can you break that down for me and the listener?
Sure. Think of buyer's credit as a specialized type of loan that Century Plyboards is using to fund their expansion. Essentially, it's a way for them to get financing for the purchase of new equipment or the construction of new facilities. The fact that they're increasingly relying on this type of financing shows they're really bullish on their future prospects, and they are willing to leverage debt to accelerate growth.
So betting big on the future, even if it means taking on more debt, is that concerning at all? I mean, how much debt is too much?
That's the million-dollar question, isn't it? It's definitely something investors should keep an eye on. While taking on debt to fund expansion can be a smart move, it's crucial for Century Plyboards to manage those obligations effectively and to make sure they don't become overburdened. We'll dive deeper into their debt management strategies and overall financial health in the next part of our deep dive.
Okay, sounds good. We'll be unpacking that for sure. But for now, let's wrap up part one of our deep dive into Century Plyboard's Q2 performance. We've seen some record-breaking revenues, a dynamic mix of segment performance, and some strategic decisions that hint at ambitious growth plans.
Indeed. And I think what's particularly fascinating is how they're navigating external challenges, like those rising input costs and the fierce competition. It'll be very interesting to see how they continue to adapt and evolve in the coming months.
Absolutely. And in part two, we'll delve into the company's financial health, their strategies for managing debt, and how they're positioning themselves for future growth.
Welcome back. So we're going to take a closer look at Century Plyboard's overall financial health and how they're managing those growing debt levels.
Yeah, where do we even start with something like that?
Well, one of the best places to start is with their working capital, essentially how efficiently they're managing their short-term assets and liabilities. And one metric that stands out in their financials is their cash conversion cycle, which has been holding steady at around 2 months over the past few years.
Okay, but what does that actually mean for someone who isn't a finance whiz?
Think of it this way. The cash conversion cycle is like a financial relay race. It measures how long it takes for Century Plyboards to convert their investments in things like raw materials and inventory into actual cash. A shorter cycle generally means they're getting their cash back faster, which is a good sign of efficient operations. In this case, that 2-month cycle suggests they're doing a pretty good job of managing their working capital and keeping that cash flowing.
Okay, I like that analogy. So, efficient operations check. But what about their debt? They're taking on more of it to fuel that ambitious growth plan, especially in the MDF segment. Are they being responsible about it?
Well, one way to assess that is to look at their debt management strategy. Their investor presentation highlights a couple of key priorities. First, they're focused on optimizing their working capital management even further. We already talked about their decent cash conversion cycle. But it seems like they're not resting on their laurels there. They're continuously seeking ways to squeeze even more efficiency out of their operations, which can free up more cash flow. Second, they're committed to what they call prudent debt management. Essentially, they're aiming to strike a healthy balance between debt and equity, the money they've raised through issuing shares, to ensure they're not overly reliant on borrowing, and that their long-term financial stability isn't jeopardized.
So they're trying to avoid building a house of cards, got it. But they're still pursuing aggressive growth. Where's all that money going to come from?
Well, it seems like they're exploring a variety of financing options, both from domestic and international sources. This approach helps them secure the most favorable terms and also diversifies their funding base, reducing their reliance on any single source of capital.
Smart move. Diversify. It's not just for investments, right?
Precisely. And it's not just about borrowing either. They've also hinted at potential mergers and acquisitions as part of their growth strategy.
Oh, so they might be going on a shopping spree. What have they said about that?
They've been pretty tight-lipped about specific targets, but they have said that they're open to exploring opportunities that align with their core businesses and offer what they call synergistic benefits.
Synergistic benefits. Sounds fancy. What does that even mean?
Basically, it means they're looking for companies that would complement their existing operations, either by expanding their product portfolio, acquiring valuable technology or expertise, or strengthening their presence in specific markets. Think of it like pieces of a puzzle fitting together to create a more complete picture.
Ah, I see. So they're being strategic, not just buying random companies for the sake of it.
Exactly. It's about leveraging their financial strength and market position to make smart acquisitions that will propel their growth further.
Okay, so we've got the financial picture, the growth strategy, and the debt situation. But what about the bigger picture, the industry landscape they're operating in? What kind of challenges and opportunities are they facing out there?
Well, as we discussed earlier, one of their biggest headaches right now is the rising cost of raw materials, particularly timber. This is a global issue affecting the entire wood panel industry. Century Plyboards is actively exploring ways to mitigate these costs, such as negotiating long-term supply contracts to lock in more favorable prices, and optimizing their sourcing network to find the most cost-effective suppliers.
Right, everyone's feeling the pinch of those rising costs.
Yeah.
But what about competition? They're not the only players in the game, are they?
Absolutely not. The wood panel industry is becoming increasingly competitive, both domestically and internationally. Century Plyboards is tackling this challenge head-on by focusing on what they do best: product differentiation and innovation. They're constantly developing new products that cater to evolving customer demands and preferences. A great example of this is their recent launch of a line of antiviral and antibacterial plywood, tapping into the heightened focus on hygiene and safety.
That's smart. They're turning a challenge into an opportunity
Mhm.
by offering something unique and valuable in the market.
Precisely. They're not just reacting to market forces, they're actively shaping them. And it's not just about product innovation either. They're also leveraging their well-established brand reputation and extensive distribution network to reach a wider customer base, both India and internationally.
So it's a multi-pronged approach. Innovative products, a strong brand, and a wide reach. Sounds like a solid recipe for success.
It certainly does. They're playing both offense and defense, proactively addressing challenges while simultaneously capitalizing on emerging opportunities. But they're not operating in a vacuum. The broader economic context also plays a significant role in their performance.
Oh, right. The big macro stuff. We can't forget about that. What are some of the external factors that could impact their plans?
One key factor to watch is the overall health of the Indian economy. If growth slows down significantly, it could dampen demand for Century Plyboards products across various sectors, particularly construction and infrastructure development, which are very sensitive to economic fluctuations.
Yeah, that makes sense. When the economy sneezes, everyone catches a cold. But what about the government? Could they throw a wrench into the mix?
Absolutely. Changes in government policies, regulations, taxes, or subsidies could significantly impact their operations and profitability. For example, if the government were to impose stricter environmental regulations on the timber industry or increase import duties on raw materials, it could increase their costs and squeeze their margins.
And then there's all that global uncertainty we keep hearing about.
Exactly. Geopolitical tensions, volatility in commodity prices, and potential disruptions to global supply chains. These are all factors that could create headwinds for Century Plyboards, just like they could for any company operating on a global scale.
So it's a complex landscape, with both opportunities and challenges on the horizon.
Indeed. But what's clear from our deep dive so far is that Century Plyboards is approaching the future with a combination of confidence and caution. They're making strategic investments, diversifying their operations, and remaining agile to adapt to changing market conditions.
It sounds like they're trying to be as prepared as possible,
Hmm.
but also ready to pivot if needed. That's encouraging to hear.
It certainly is, and it speaks to their commitment to creating long-term value for their stakeholders.
Well, folks, that brings us to the end of part 2 of our deep dive into Century Plyboards' Q2 FY25 performance. We've explored their financial health, their strategic initiatives, and the broader industry landscape they're navigating.
And in our final part, we'll synthesize all our insights and leave you with some key takeaways and thought-provoking questions to ponder as you continue your own exploration of this fascinating company.
All right, welcome back to the final part of our deep dive into Century Plyboards.
It's been a fascinating journey, hasn't it?
Yeah, it really has. We've been from record revenues to rising timber costs to potential shopping sprees. It's been quite the ride.
It has, peeling back the layers of their financial performance and their strategic thinking.
So if we had to distill all this down,
Yeah.
what would be the key takeaways? Like if our listener had to remember just a few things about Century Plyboards, what would you say those would be?
I think the first takeaway is that Century Plyboards is not afraid to take risks. They're hungry for growth and willing to push boundaries like we see with their aggressive expansion plans and ambitious sales targets, particularly in that MDF segment.
Yeah, that 40% plus growth target in MDF is pretty eye-catching.
It really is.
But they're not just being reckless, are they?
No, I wouldn't say that. And that leads us to our second key takeaway. They are very aware of the risks involved, whether it's the volatility of raw material prices, the intensifying competition, or the potential challenges posed by their increasing debt levels.
So how are they balancing that ambition with prudence?
Well, that brings us to the third takeaway. They're not just crossing their fingers and hoping for the best. They're actively taking steps to mitigate those risks, like securing stable timber supplies, focusing on product innovation and differentiation, and of course that commitment to prudent debt management that we've been talking about.
So playing offense and defense,
Exactly.
pushing for growth while also building a strong foundation, just in case things get a little rocky.
Right.
Which brings us to the fourth takeaway. And I think this is probably the most important one. Adaptability. Like in today's world, things change so quickly. Being able to adapt is absolutely crucial.
Couldn't agree more. And it seems like Century Plyboards has really embraced that mindset.
Yeah, they're not afraid to adjust their strategies,
Yeah.
explore new opportunities, and pivot when needed.
Absolutely. And
Yeah.
that kind of flexibility is a powerful asset in any industry, really.
Now, before we wrap up, I want to leave our listener with something to think about, something that goes beyond just the numbers.
Sounds good.
So we've seen the Century Plyboards is pursuing this aggressive growth, especially in that MDF segment. But like we've been talking about, there are these external factors that could really throw a wrench in their plans.
Yeah, for sure.
What are some of the things our listeners should keep an eye on?
I think the global economic outlook is a big one. If we see a significant economic slowdown, that's going to impact demand across multiple industries, including construction and furniture, which are, of course, key markets for Century Plyboards.
Right, like if the whole world goes into a recession, no one's going to be building new houses or buying new furniture.
Exactly. Another thing to watch is the regulatory landscape, both in India and the international markets they're targeting. Changes to environmental regulations, trade policies, tax structures, all that could create some serious headwinds.
And we can't forget about geopolitics, right?
Oh, absolutely. Geopolitics can be a wild card. Conflicts, trade wars, political instability in key regions, those could disrupt supply chains or create volatility in currency markets, all of which could impact Century Plyboard's costs and profitability.
So a lot of moving pieces.
There are. It's a complex world out there.
But it sounds like Century Plyboards is ready for whatever comes their way.
I think so. They're staying agile and adaptable.
Well, that brings our deep dive into Century Plyboard's Q2 performance to a close.
It's been a pleasure.
We hope you found it informative, and we encourage you to keep learning about this company and the wood panel industry.
It's a dynamic space.
So until next time, stay curious and happy investing.